morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And as always, we are going to get into all the key nuances. Yesterday was a huge reversal day in the market, even though, and look at that, even that's a little surprising for a Friday. But nonetheless, even so, we saw NVIDIA up on earnings. Wow, what a move on earnings. But the fact that the stock market declined was impressive, and that was a reversal engulfing candle. What is a reversal engulfing candle? I'm going to tell you about it in just a minute. We're going to take a look at crypto, stocks, commodities, you name it. Let's get right into the action. All right, right in we go. Let's see what we have on the S&P 500 to start the day. This is the pre-market action. So again, this type of stuff is going to be what the markets are doing before the stock market opens. Remember, 3-day weekend for the stock market. Saturday, Sunday, and markets are closed on Monday. What does that mean? Generally, it means very light volume in the stock market because a lot of the big traders have probably left as of yesterday. I'm sure they stayed through NVIDIA earnings. Now they're like, peace. I'm going to go on vacation with the family, get away. So what are we seeing? Yesterday we had the big down day, the reversal. The Dow was down over 600 points in the pre-market, and here in the overnight we see the markets floating higher. Remember, light volume favors a float to the upside. Light volume, you generally assume we would go up. Okay, so the biggest thing to look at here is what the heck is a reversal engulfing candle? And number two, holy cow, talk about the 533 level on the SPY. I gave that to you guys in yesterday's game plan. I said that is a major resistance line. And where does it come from for those newbies that are just tuning into today's action? We zoom out all the way back to 2007. And what do we see? The high of 2007 before the Great Recession dropped the market by about 66%. We then had the 2021 high, corrected about 25%. And finally yesterday, on the gap higher on NVIDIA earnings, the market, the S&P, tagged that trend line again. What happened? It sold right off. Now listen, one day doesn't change a trend. Is it a market top? We don't know yet, frankly, and that's just the unknown that is part of being an investor and trader. But what I do know is that we did get a reversal engulfing candle on the daily chart. What is a reversal engulfing candle? A reversal engulfing candle means it's the reverse of the current trend, and it opens, the daily candlestick, it opens above the previous high, and it closes below the previous candle low. So it has to have those metrics to it, right? So needless to say, we've been in an uptrend, whether it's a short-term uptrend or the long-term uptrend, it's still an uptrend. On the daily chart, we opened way up here and we closed below here, engulfing all of these candles. That's called a reversal engulfing candle, okay? So on a technical basis, that is a very bearish sign for the markets. Now, a couple things that you want to watch for here, all right? And again, remember, bearish signals can be negated. So how would it be negated? If today or next week or any time in the future, you have a daily close above yesterday's high, daily close, not a Pierce intraday, daily close, then it would negate that bearish candle. All right, so again, knowing when a signal negates is unbelievably important to knowing which direction the market is most likely going to go. So as of now, as long as we don't close above that high, you would favor downside bias. Now, not heavily yet, and I'm going to explain why. We're going to get right into that now. The reason why you don't heavily favor downside is because you really want to see follow through. Now, the follow-through doesn't have to necessarily occur today, especially pre-holiday weekend, but you need to see the follow-through at some point probably next week. What would follow-through be? It would be a significant down day. It doesn't have to be as big as yesterday, but at least a decent down day where you close below yesterday's low. So if we look at this candle, let's say we go like this and we chop sideways here today. We go up a little bit tomorrow. We go up a little bit, I shouldn't say tomorrow, but next Tuesday and Wednesday. And we sell off, you have to have a candle that closes below that low. All right, so even if we float up, which honestly, it doesn't mean we'll float up today. Maybe we do see a sell-off. I just think it's not very likely. Probabilities are low because of the holiday and the big boys and the big girls leaving for the weekend. But you still need to see a confirming move or kind of that continuation move to the downside to really solidify the reversal engulfing candle. So how would you rate this market right now? just off of all-time highs. But you did tag this trend line, number one. Number two, we got the reversal engulfing candle, so that's 2 of 3. 2 of 3, it puts you in a slight negative bias, not a full-out negative bias until we see a confirming move to the downside. All right, so I just love breaking that down because these nuances are the difference makers between investors that are clueless and really just guess versus investors that put the probabilities in their favor. And again, if you can just put the probabilities in your favor, probabilities take care of themselves, right? If you can win 7 out of 10 times and you do that 700 out of 1,000 times or 7,000 out of 10,000 times, the money takes care of itself and you build the long-term retirement goal that we all have. All right, number two, let's go to charts here. The 10-year yield, notice again, it's creeping up. Yesterday, NVIDIA earnings were amazing. We saw the stock up, but the concern about higher inflation and an economy that still doesn't appear to be where the Fed needs it to be to cut rates is putting pressure and put pressure on the stock market. All right, we broke down, this is the 10-year yield chart, classic channel pattern. We broke down, and what did I say was going to happen? I said you'd likely retrace to the scene of the crime. The scene of the crime, we know this is your trend line. This is your channel, lower end of the channel. We broke down. Where's the scene of the crime? Right back there, and I would expect a move lower. So we're just about to that retrace to the scene of the crime. I think I even told you guys literally a week ago, I said look for a retrace back to 4.5%. Right now we're at 4.496%. So nice little technical analysis there that kind of guides you guys. And again, does it mean that we have to go lower after we hit this? No, but it means that probabilities favor it. So about 70%, 65% favor that you would roll over here versus 30 to 35% that you could go higher. And as a technician, if we do get above this level, then we start adjusting our probabilities, right? It changes the metrics of what we're looking at to start to expect maybe some additional upside if we can break through and confirm. All right, guys, just a couple stocks in motion. Obviously, NVIDIA. NVIDIA is rolling over a little bit. Well, I shouldn't say that. It's up still net from pre-market, but we can see pre-market it was going up, and now it's seeing a little bit of a pullback here. So I'm curious to see where NVIDIA goes. Yesterday we did not, and I repeat, we did not get a topping tail. All right, topping tail would have been a very bearish signal on NVIDIA. I would say mid-afternoon, it was looking like that. It was selling off, and it was actually at the lows of the day. And then towards the end of the day, we got this little bounce in the markets, and that helped NVIDIA push up. So you don't have a top signal yet on NVIDIA, and I want to be clear about that because, again, we're talking about tops in the markets, but NVIDIA at this point does not confirm that it has a top in it based on the candlestick that formed. All right, next up, what are some movers and shakers? Today we have Workday. Workday is getting hammered here. It is a little bit off of the lows. These earnings came out yesterday after the bell. Big drop initially and kind of some chop and a little bit of a float back up. In terms of a technical level on Workday, what are we looking at here? Let's zoom out on the chart. I have a couple levels here. The first one is around the 223 level. All right, so there was a gap fill right here. We talked about that yesterday in trading the close, but we went through that already, so you kind of push that aside. Now you have a level around 222 to 223, which is this pivot right here. And again, it's right around that 222 to 223 level. That's more of a day trading level, to be honest. We'll probably be watching that in the Apex Live Day Trading Room and trading it. And by the way, literally 5 for 5 yesterday in the Apex Live Day Trading Room in the morning. Some days, by the way, we don't have any trades. We're unbelievably disciplined. But yesterday was an awesome day, 5 for 5 in terms of day trades in the Apex Live Day Trading Room. You can check that out on verifiedinvesting.com, by the way. All right, the key level for me on a swing basis is if we come down into this zone, which is right around the 200 even number. This would be, look at this. You have this low, you have a gap fill right here, this gap window, this low here, and right here. This would be a level where if we came, let's say, next week into the 200 even number, I would look for a swing trade bounce on the back of Workday. All right, next stock that I wanted to talk about was Intuit. Intuit, again, reporting earnings and the stock getting absolutely crushed here. This is a big drop for Intuit. I didn't realize how big of a company it was. Before this drop, it was a $185 billion company, which, again, we're in the world of trillion-dollar companies. But let's be clear, 90% of the S&P 500 is worth less than $200 billion. So this is kind of right on the cusp of that in terms of being basically in the top 15% of market caps in the S&P 500. So it's actually a pretty big company. It just doesn't compete with the NVIDIAs and the Apples and the Microsofts. Okay, so right now we're trading at 621 pre-market on Intuit. If we go to the charts here and we look at what levels are down here, there's a gap fill at 614. The only thing I'm concerned about is that it kind of traded down there yesterday after hours. I don't like when a level is hammered on even after hours or pre-market. So what do? I go to the next level lower, which is obviously this pivot low right in here. And that is right around the, let me get you the price on that, right around the 600 Pierce level. So today on a day trade, and by the way, this is not a swing trade. I don't have any swing trading levels on this yet. But right now, a Pierce of 600 today. I'll be watching it with my day traders in the Apex Live day trading room. Lastly, I do want to just touch base on Decker. Decker is up substantially on earnings. I actually like this as a Williams-Sonoma type rollover play. I could be totally wrong, but the metrics are almost identical, all right? So, in fact, I'm going to get rid of this because it's more confusing. But if you look at the chart, right, if we zoom out on the chart, this stock just in the past, basically since October of 2023, so not even a year ago, right here, guys, from right here, it's up over 100%. It's trading over $1,000 right now. It's so 100% move since October, and it's up above the all-time high here. And what do we know about Williams-Sonoma? This exact thing played out on WSM here, and I want to just remove that as well, is it was basically up the same amount since October, about 100%. And in addition, it opened above the previous all-time high here and sold off like this. Now, again, I have no clue if this will be the result, but I will say this, is that the charts are the same. We know that this is a tendency during this earnings season that the institutions unload into it. We also know that at least I looked into the earnings announcements, their major beat, they beat on earnings really well, and they beat on revenue really well, but it was from two products, Uggs, which again, it's a footwear company, so Uggs and Coda, I think, is the other one. And basically, it's two products. And my concern there is that if people are fickle, right? Lululemon, not popular anymore. Under Armour, not popular anymore. And so, again, the company Decker is priced at a forward PE of over 30. Think about that. A retailer priced at a forward PE of over 30, and it's based on consumer spending, and it's got two good products, but other than that, everything else kind of stinks. I don't know. I could be wrong again, but this is one that I'm watching on a gap up here for a potential short to the downside. We'll watch and see how it goes. All right, on that note, guys, I wanted to flip over and do the Wheel of Appreciation, so let's do that right now. Yesterday, Token Metrics was our winning spot on the Wheel of Appreciation. And by the way, Token Metrics is awesome. Check out their link below. Their AI stuff is very cool in terms of scouting out crypto movers, so I will say that. All right, on that note, who's going to win the Token Metrics subscription for a year? Let's go right through it and find out who the lucky winner is today on this wonderful Friday. And by the way, have a great weekend if you have a 3-day weekend like many people do. All right, Rad Hershey Am 1234. And I'm probably mistaking saying that incorrectly like I always do, but you guys can see it on the screen. If that's you, reach out to Lawton at verifiedinvesting.com. He'll hook it up. All right, speaking of which, let's go right in here and let's spin our wheel for Monday. What are we giving away on Monday? Apex Live Day Trading Room, I just talked about it, 5 for 5 yesterday. There you go. So one of you guys will win that. It's $400 a month. That's awesome, folks. And again, I just love this wheel and giving away stuff for you guys. It's very fun for me, and it's great and rewarding to give you guys insight. I know a lot of people, some people can't even afford these memberships, and I want to give that access. This is one of the ways that I can do it here on the Wheel of Appreciation. So again, Monday we'll draw for the Apex Live Day Trading Room, but let's get right over here into crypto. Let's see what's going on Bitcoin. Bitcoin is struggling a little bit here, and this is going to be really important, right? So Bitcoin, it had this breakout, but it did not confirm. And now it's coming back underneath this level. Now, yesterday it closed right on the level. So as of now, It's safe, but we need to see where today closes. If today closes below yesterday's low, let's say below 66,000, I would be very concerned that you're going to start to see a bigger sell-off in Bitcoin. As of now, I think it's safe. You maintain a neutral to bullish bias on it. But again, watch today's action and really watch over the weekend. Now, we did get the Ethereum ETF to basically be approved. Many people were surprised by the lack of upside action upon the approval, but it was basically already factored in by this move. So you're not getting the same hype over Ethereum, frankly. And I honestly think that's for the best, because when it gets too much hype, then you have the bigger sell-offs afterwards. Notice how this, as of now, is not selling off that much. Maybe it's even making a bull flag of consolidation for a move up to test that $4,100 high. But again, for me, I know my levels. You have resistance at 4,100 right up there, and if for some reason it sells off down in this range, that to me is major technical support. And that's really all it's about, folks. Know your levels, be unbiased, not be attached emotionally to any asset that you're trading or investing in, and just use the charts to guide you and put yourself in the best position possible. Next up, gold here, guys, getting a small bounce today on gold. Let me zoom in just a little bit so we can see it a little bit more clearly on the charts. And basically with gold, we had a breakdown of this level. Remember, this was your upsloping support line. We hit into double top of the topping tail. Remember, topping tail is the dominant factor there, so it was still bearish unless we closed above. We only pierced it, and notice how that fools people. I love showing this because emotion triggers things, right? So think about the people right up here when it got above this previous high that probably bought gold on the long side. Can't do that. You got to know when the bearish candle fails. Only then does it give the probability significantly. The institutions do this on purpose. All right, like they bring these up and pierce these levels on purpose because they know bears will have shorts here and they'll get stopped out. They'll be like, oh my goodness, it's breaking out. Let me stop out, because emotionally they'd probably overinvested. And then bulls, same thing. If you're someone who wanted gold and you see this trading above this previous high intraday, you're like, well, let me go and go all in or jump in on this. And it's like, man, don't let them screw with you. Now we've closed below this upsloping trend line. To me, this tells me we could revisit this level here around 2280 or so. If that breaks, then the 2200 level comes in. I'm still a fan of the 2200 to 2185 level because it's also a Fibonacci retrace zone. So right in from here down to here is a big retrace zone. And then obviously a retrace to the ultimate breakout scene of the crime would just be a bonus if gold came in that low. A lot of people would be upset and scared. For me, it's like, dude, I know my levels. I know what to do at my levels. That's all there is to it. Here's your silver chart, guys. We did kiss the $30 even number. Remember, we did confirm the breakout above 30. So this level, again, is major support. It didn't fully hit it. It kind of what I call a kiss of it, but nonetheless, we did tag it. You're getting a little bounce on silver today. And then lastly, a couple others here, guys. Looking at oil. Oil is continuing to play that bear flag out, although it is getting a small bounce. Yesterday, it was getting a small bounce too, and then it reversed. So let's watch to see where this goes. But either way, it's looking to me like the bearish pattern continues to play out. I still have a downside target of probably around 70 bucks, maybe even 68 on this chart. All right. Lastly, we'll take a look at natural gas. Natural gas having another down day. Remember, it hit the 618, it hit the gap fill, and it finally tagged double top. And then the topping tail was put in and followed through today to the downside, at least for now. That is a bearish signal on the charts. And again, I do expect further downside. How low could natural gas go? Right down in this range, probably around 235, give or take, somewhere in this vicinity. I think that's a standard retrace. So you're looking for a pullback in this range and then potentially a long opportunity to the upside off of that. All right, guys, it is that wonderful day here, and it's Friday. So on Friday, I get to play a little baseball. Gotta love baseball, right? But you guys, listen. Thank you as always. And again, you guys are what drives me, the comments, the kind words, everything out there that you guys are about. You guys give me lots of love and verified investing love. You spread the word by sharing this game plan to be entered into winning the Wheel of Appreciation. And I do appreciate that. I truly do. And I hope you guys are learning from the game plans and from trading the closes and all our other shows here at Verified Investing, because that's what it's all about. It's about slowly understanding the asset markets to get yourself to financial freedom. And every one of us can do it. Trust me, guys. There was a point in my life where I was literally in debt and paycheck to paycheck and making minimal money. And it was just a long road, but slowly I worked my way out of that and am where I am today. And so if I can do it, anyone can do it. You guys have a great rest of your day. I'll talk to you next week. Take care.